Hello and welcome, and it is that of Crypto Day, and well, 22nd of May as well. And the 4-minute morning wasn't quite such as the internet that I'm using, the Wi-Fi and modem. I reset everything back fine again. Anyway, back to the chart and the subject in which I was going to move on from. As I stated, the short position, if one was to go in, was either here or here. I think it was here though. I was on the 400 minute, but this one makes the most sense because this is where it declines the 18 average of highs, and the date on this is May the 10th, and I can always quickly check my past videos. And sure enough, that's when I did say it. So if you're looking to play this via, okay, I got to put a stop in, where do I put a stop? Originally, it would either be above this band here. If you want to be more aggressive, maybe above the more recent one above here. But either way, of course, they never would have got stopped. So as this rally comes in, it goes nowhere near. But when something like this happens, you can adjust and put your stop above this high, and you see in here when the market rallies to this point, it stays below it. And now it's had a move like this, you might reduce it down towards here. And this is another reason, because a lot of people use this trading platforms type of strategy, that if you end up being success, or if this works out and the market goes higher from here, not only do you get people that are buying at normal, but you're going to people who are going to get out of, well, either losing positions, or in this case, it'd be a barely win, which is a spot here where if you were to short here, you can see when the risk reward came into place, this was the maximum risk you endured. And if you were to get stopped out now, you would get stopped out with like a microscopic profit. Basically, shorting at about 89.39, and then with your stop now at about 87. That's just like 3 or 4% or something, not much, and not a strategy method that I'm really happy to trade, at least not shorting Bitcoin. This is very much getting relatively choppy in here, but I'm expecting a lot of choppiness within the overall set of the markets. I mean, short term, it's just been grinding its way lower even on the 5-minute. Oh, so we could say, oh, maybe it's going to attempt to bring this thing back over again. But whenever you see the attempt come into place, it's either going to succeed or the next leg lower is going to come in. For if it fails, here's a spot where up towards here, back to the band, and the failure, the leg lower. So now it has just been able to make this move above here. It has hardly done much of a gain, especially when we consider the fact that there is, I'm not going to say countless amount of lower highs, but a larger amount, because you could count them if you really wanted to. But it is countless because I'm not counting them. Now let's just switch this up to Litecoin against the US dollar and pattern recognition. So since the market reverted over, we can see that on the timestamp of the 21st using the 60-minute, how it spent a several amount of periods within this 18 average, sticking with the lows as support. And like most breaks, you get a decent leg lower, and then it barely goes higher, doesn't even get to the 18. Has a little bit up and down moves in here to this low, gets to the 18, which was where the support was before. New leg lower, then a very good rally compared to, well, at least the fact that it broke a higher or lower high. So we're obviously seeing that failed move, fast move lower, because you go from a pattern of making lower highs and lower lows So you go lower high, lower low, lower high, lower low, higher high, lower low. It's already made this lower low. So you see the price action get above the 18 like it did earlier this morning. One red candle to the highs, next one to the lows, consolidating that move, rallying to the highs, and then the big push lower that broke the level of support where it looks like it's resisting that. At this time, it's resisting the 18 average of lows, which is declining after, of course, this move takes place. Definitely not a setup that looks bullish. In fact, it's quite the opposite. Meanwhile, when we look at this on the daily term time frame, which is 24 periods larger than the hour, I'm seeing a lot of support where price action is currently standing. That's where the break on the 18 on the daily came to, resisting the newly declining. Comes back there again. Literally a half-assed rally, or half the gains it had before, but it did still again within the lows. And here it is now crunched within that point. So therefore, when you have a situation like this, you have a leg lower, you correct, then you're either going to have a leg lower again, or you're going to have a reversal. And the reversal is not looking like the play right now. So leg lower wouldn't indicate something like 125, because that's where you'd be talking. If that's where you bottom, you're talking about a failed breakdown. Generally speaking, I'm always looking at stuff like, well, if I'm a buyer and I buy low, sell high, which I think I might want to do just for fun on this video, and I'm going to right after this, yes, within this video. But I would probably be looking to put a buy order in at around 113 as that next target. So I'm going to now put Litecoin USD on a different exchange because I want horizontal raise in this video. So what we're going to do is I'm going to move this to the hourly time frame soon. Let's talk about what it would be like if, say, it was back in here. You played. This is the time frame here. This is where you believe Litecoin was going to go. Maybe, well, I was already in it decently at this point as it was. Maybe that's just when you wanted to get in. So we're going to use 72.31 on November the 21st, but look at this on the hourly time frame. Let's actually do the 3-hour time frame. So what I'm going to do is just scroll back via this measure. And this is fine here. 92.84 is what I'm going to use. And this is a point where I would be putting in a bunch of different buy orders and sell orders. So we'll place a buy order, say, let's go this previous low at 87. Put another buy order here at, say, around here. And I'm going to be putting a lot of lines on this screen. And I don't think it comes down anymore, but technically speaking, if you were playing a game of a nature like this, you ask yourself, how deep, how far down the rabbit hole am I willing to go, pretty much. And that I'm going to keep on buying it low, selling it high. So at what point, where do I place my buy orders? What can I afford to get in? Okay, I shouldn't be doing that because this is good. So let's put some sell orders in. And I'm doing this just to make them a bit bigger. I'll adjust this one when I reset the scale of the chart. So we'll go around, say 96. Maybe again at 104. You know, this is really, no, I can't. Okay, if I'm going down for the buy, I'm going 90, 87, 81. Let's ditch the 3-hour time frame and do this via the no, let's just ditch the orders as they are. I got a lot of lines here, so let's do it this way. This time frame will still work. See, what I'm doing here is I'm getting it in positions to where I would realistically be looking to put buy orders. I want them to be percentage gaps from each other decently. If I'm in an accumulation stage, I don't mind putting larger sizes in for amounts to buy or just even more buy orders, period. Especially if I'm really, really bullish in a spot where key breakout levels, I don't want to have too many sell orders in spots where the market could very easily, within that run, surpass those gains. But when you're playing this and you got a whole bunch of a coin, you want to play it really aggressively on the buy low, sell high, is you want to have all, I mean, generally speaking, you don't have to have all your sell orders in right now, but you want to have them ready as the markets go in. If you're playing this in real time, of course, you're going to delete some here and there. You're going to do all that kind of stuff. So what did I put the buy in at? 92.84. So what we're going to do is just keep on moving the market to the next point and see what happens here. This is a spot where two buys get executed. And technically, with a buy at 80, what I would do is I would sell one of the orders now at 90 and then sell the other one later. So what I would do here is I'm just going to remove this order down a bit. This one would be a buy order back, and I want to go previous low within that level of resistance. Now when I look at this here, I'm going to put my next sell order below this previous high, but then that 106 becomes problematic. So I'm going to rise this up a lot actually. And you can see there's a bunch crunched together like that. Of course I know where the price moves close or goes up to. But the bottom line is I would have orders going to 5, 6, 7, 800. That's just pointless for me to put in knowing that the price will never go there. So there's where we would stand at this point. You're at 90. You're going to sell if it goes to 101.42. You're going to buy if it goes to 77.82. And I can just check in the low here. We had 78. Nope. So there's a spot where you miss that opportunity to get even further gains. But this is a spot where you do get your sale order in. What we'll do is we'll move this down to like a little retracement area somewhere around here. And then watch the market move. So that you would have made a transaction on December the 1st. You're not doing anything. And oh, something big just happened. Maybe you left when you went to bed, or you went out in town, it was 111, and you wake up or you come home and you see 2 sell orders that got executed. At this point, I'm just going to remove the lines lower. So I'll put a buy order above the 87 somewhere. Maybe this will work. And then maybe even a little bit higher, maybe. And then maybe one at that previous level. Big rally, so I want to leave a decent sized gap for the pullback. The 186 level would obviously have then been sold as well. So therefore we'll move this line down, maybe within this congestion area here, as where you would place your next buy order. So time goes by, a little bit of retracement. You didn't get that buy order, you're not getting it yet. Instead you get 2 sell orders that came in. So again, it's time to reduce the lines lower. These are new buy orders, so we'll put one up in this congestion area, maybe even reduce this a bit, go in here to this area, and then one at the top-ish part of this area in here. And let's move the market. And one more sell order, the 430 would have missed. And I could have intentionally made it to hit, knowing what the top was, but hindsight is 2020. But knowing how a strategy like this will work, well, 2020. And at this stage, we'll time to move this down, maybe move this into this congestion range in here, maybe a little bit higher here, a little bit higher here, and something like that. And while you're at it, I know it's not going to happen, but in a spot like this, if I miss a sell order like that and the market moves towards such, I'll probably put a level below previous high, and if I'm very cautious that it's going to sell off, then I might take some sales now, or look for sales at much lower levels, like around 355 or 360 at this time frame. But let's just keep on moving the market, and we can see that as we move into December, that we had a monster buy period. Well, not too much, but 3 buy orders were executed amongst that decline. This means it's time to plant some sell orders. Maybe some around 345, and then you decide to plant some more, maybe somewhere around here at 283. And if I bought at 157 and I'm staring at a price at 247.20, let's sell. And then I'll put my buy order back pretty much where it already is. Let's just leave it at that number, actually. Let's continue on moving this market, and the sell order at the 284.90 gets executed or filled. So now we could move this order down, maybe a little above the 200 mark, which was a key area of support here. And then just wait and wait and wait and wait. And wait longer even. This is where you have to go almost a week without a trade. And it missed. Again. Oh well. That's part of the game. It's all about the game and how you play it. This is where you can decide, man, do I tighten up or loosen, tighten up my volatility, and I missed out on a trade here at 300. I missed it on the buyback here. Of course, if you're patient. Now, in reality, I'm going to put a buy order here. I'm not going to sell. Meaning, I'm going to put a sell order. Meaning, if I was at the computer here, okay, Phil, I'll put a sell order in, and then I'll watch it go down some more, and this buy order would hit. So I enter the computer here. It's 181. 2 buy orders have been hit at this time. And this would mean it's time to place sell orders. So let's take a look at where we'd want to go. Maybe below this high at about 288. And then maybe somewhere around here at 230 would be an area I'd look to go towards, and then let the market move. It's either going to be sell at 231 or buy below, it looks like 130 or 120. Several days pass, and there is your buy at 127.85. That means it's time to place a sell order in. And maybe you want to go up towards this previous support level. You want to see act as a possible level of resistance. So we'll say 168. But you also got another buy order filled at 107.45. Now you can sell for 126 for a profit, but let's just pass on it and maybe move this 160 up a little bit to say that within this range at 178 and move this up to about 148. We missed the 95 buy, and of course you got one sell, not quite the second, but the 148 sell order comes through. So therefore we can move this back down, maybe towards this previous low here, which would obviously hit. And I'm going to increase. Sometimes I said go below it. Here's where I'm going to bring it above here, because this buy order is going to be up in this range around 140 something. But 113.77 would be executed for a buy. So therefore, again, let's put this in the area of about a 61.8, 72, 73% retracement. Maybe a little bit below 150 is normally where I would usually go here. And I would get myself, though, at the 149.05 handle. So we'll move this lower again. We've had a twice hit low here, so I'm just going to go again. If it comes back, I'm going to go back to where it came from before. And I'd be waiting for 188 or that 108. Well, the 188 is the next correct answer, and that would be where I sell. And we'll move this down again, somewhere maybe in towards here maybe. You want to be decently above the 108, maybe even a move down towards here, especially because now the 231 order would be executed. And we'll move this lower to, say, this previous congestion area or resistance level. And so here's a spot. You're over a week without a trade. Make it a couple of weeks, maybe make it into the third. And you buy at that 162 handle. And then it goes up. I got to put a sell order in. I would be looking maybe up towards this previous level here. Obviously that rally didn't make it there. The sell-off didn't make it to where I wanted to buy. It did there though, 134.61. And we are now in late March of this year. So therefore we'll place a sell order, maybe. We got this little area where it came from. That's the key level of support. It's nicely below the 203 number. So maybe somewhere here looks nice. Another missed buy opportunities based on that the bottom was a little higher than the buy order. But the rally got to sell in at 162. So this is a spot where you get unlucky sometimes, so be it. It's going to happen. And sometimes you're going to get lucky as well. And we can move this down, say, to this previous level of resistance that maybe might act as a point of support. And it does. And that's exactly it. You just see that level. You're going to get more hits like this when you do those types of key areas. 132.69 buy. So we got the key areas for the sell. We've already got a line at 203. So 61.8% is one of the ones that I'm thinking about, which would be even a little higher than that. So maybe this little area here, area of resistance, area of support, area of resistance at 159. However, I'm done as far as moving in time because we are live and the price is 132. And as the market stands, this is what I'd be waiting for. I'd be waiting for a sell at 159, again at 204, and so on and so forth on the way up. And in reality, I'd probably even have a sell order between 203 and 287. And this is just something you see, you got to stick in there kind of deal. Especially when you're profiting well within the market. And if there's any major declines because you've been profiting within your trades, you're just going to gladly buy these babies back up. For if we look at the trades again, the entry position was to get in at 92.84. But when you look at these moves, you buy back at 87 and 80. So you sell 80 for 90. Those go together. And you sell 87.35 for 104.42. And then all of these sales in here represent that from your 92.84 buy. But you can look at it even more further that after the big top, you go from 336 to 243. There's your buyback, an amazing profit. 267 would buy back at 193. 221 would buy back at 157. And then from that point on, you can see just all of these moves. Sell 247. This is a lot of transactions. Sell 284, buy 205. That's magnificent. 157, 127, 107. And just going to keep going on. And again, this is where it stands. 3 of the last 4 executions would be buy orders because the markets go down lower. And you really never need to care too much where the market moves in the short term with strategies like this. You just let it move. And when I say the market's going to do what the market's going to do, this is a strategy that plays within that thinking. Of course, you want to always play codes that work out very well. You want to enter in positions when the market has been selling off really well, or it has had a situation where it is correcting bullishly after it corrected and it's not up too much. Meaning when the market was breaking out originally at the end of last year into this year, going to 200, 300, 400, those were just terrible times to enter into a position for a big order. Now, there's nothing wrong with entering in at 300 like that and saying, man, I hate it, I don't want to do it. But I'm sure as heck going to be buying if it keeps going lower. So that would work out on that sense there. But I still always like to get in when the prices are much, much lower within its price movement. So when I see this on the daily time frame, we're going to see all the lines in here. And is it down enough? Yeah, could it go lower? For sure. For most certainly can it. Now, say you're playing a position like this. Yeah, I want to get into it. One time in which you could consider getting in, or playing this aggressively rather, is when you notice you're at the euphoria times. If you're like, oh my goodness, even just going back in something like this, market goes up to like, say, 250, what do? I was doing so well. Well, you can sell a very good amount and just start playing this game. And when I say very good amount, that means a 250 sell order, you probably want to place like 5 buy orders to count to suffice buying back within that. So as we move in, you could almost start saying the same thing. Let's just say the market starts moving up to say 275, 280, 290. You're like, man, this might be a good time to start executing that strategy. I'll sell at 288. I'll put a sell order before this high at 350. Maybe I'll execute one at 527. Maybe again at 700 or 685. And you can go like 685, 725, 750. You can do whatever length differentials you want to go. But if you can understand that it's not difficult at all to get 20, 30, 40% plays on the buys and sells like this over and over and over again, it's definitely what I would consider a strategy worth considering. I've come up with different levels. Of course, this one is the more simple set of just trying to get the buy lows and sell highs. Now this can work out. To me, there's three different kinds of markets. One does well, especially given its conditions. One does well enough, and one does really bad. So let's go over those three. And I'm going to go back to the Bitfinex exchange for this, because I want the older data for why Coinbase went up so much. If you were doing this strategy, thinking of it back here, you buy everything at $3.85-ish, $4, $5, which whatever. And then you're like, man, this is just so good. I mean, $16? Are you kidding me? Yeah, let's start selling it. If you didn't sell here and you held it, there's a good chance you're going to outperform somebody spending a lot of time here, but selling at 16, trying to buy back at 12 or 10 or whatever. Now the whole secret amongst this is making sure that when you have this, that something like this doesn't happen, where you maybe you're at 144 and you're like selling out. Of course, granted, selling at 144 wasn't a bad thing at this time. But even just selling out at, say, like $30 back in here, you have this sell order at, say, $26.78 and you got nothing left. You barely were able to buy back. So your risk there is you can shade your profits really, really badly by doing so. And then you got markets that go straight down. And the quickest one I can think of, well, I guess, how about, what did they call that one? BitConnect. I mean, that's one that just got crushed, Litecoin Cash. You start swing trading on that and the thing just goes straight down, your portfolio is going to get destroyed. And then you got the choppy markets, and this is the one I'm going to cover next, but not in this video. When we look at silver against the Canadian dollar on the weekly chart, this has been nothing but choppy. So what I'm going to do with this is show later on how well you can profit when it just swings up and down like this. And yeah, the choppiness. So in the situation here, if you were to say start getting into this, oh, it's down, I'm going to buy at 23.63, and you just did nothing. Well, you're down a little over $2. Hopefully you got in physical, and I think it's going to shoot up high. And of course, this is just understanding the mechanism of the trading game, because to physically do this in this game, it can be done because the rate can be really low. You have to have a big account probably. But this is, of course, for crypto ideas. When you got crypto markets that can work this choppy, especially with extreme volatility, how profitable it can be. And yeah, so choppy, you're going to buy low, sell high. You're going to notice if you say got in at 23, instead of being down a little bit, you got a very good profit right now, even though the target market you started with is down 10%. Of course, going straight up, you're not going to do as well, but you know what? You're not in it to have, well, you're of course you want to get the best gains you can, but when you use the analogy, you can't go broke by selling for a profit, which is the idea that you sell too early. When a bad situation still gives you profit, that's a good thing. But it's worth noting that when markets go way up, like it has, and you could have done better by holding on, that over time, you could very easily outperform those who buy at, say, 5 and are still holding at 130, simply because you just can outperform that. And also when markets go in major down moves, say you get in at something, and let me just say something like Steam might be a good example for this. Say if you start getting into, say, something as it was breaking out here at like, yeah, you're just playing at like 100, things down 3x. Yet by playing around this, you could be profiting maybe just small. But if you can get into a code where the price is 3 times lower from when you got in, and you're breaking even, that's damn good. Okay, thank you for tuning in and have yourself a great day. Bye-bye.